Agarwal, who's the head research at AUM Capital, to talk about the entire defense space. How should you poise your positioning when you talk about the sector, especially in anticipation of the budget? A very good morning to you, Rajesh. Thank you so much for joining us in the show, and in particular to talk about the defense space. Like I said, over the last few years, the government's thrust has actually been on Atmanirbhar Bharat, and that sort of has actually pushed this entire sector, or rather the interest in this sector. What's your take going ahead? Because of the last few months, we've seen the defense sector also bear the brunt of correction.
Good morning, Sharon. You said it right. In the last few weeks or rather few months, some of the defense stock has seen a cut of around 20-25% or even more in some cases. But one thing remains clear, that defense as a sector is going to grow. We have seen the sector being growing like anything because of Atmanirbhar Bharat, government focus on integration of defense sector. And the country is advancing towards self-reliance in defense, I would say. Be it domestic procurement, increased investment, strategic partnership, exports, everything has been growing. And we believe that the allocation in this time in the budget would be around 2%, almost on the same levels as the last year. But going forward in the next 4-5 years, it might increase to 2.5 to 3%. We should not forget that exports have grown almost 16 times from 2016. Defense exports have grown by almost 16 times from 2016, and that's going to increase. So not only domestic market, but we are catering to even other countries. We are doing exports and defense. That's a big sector. There might be some amount of correction here and there because of valuation and other things. But the fact remains, defense as a sector is going to give good returns the next 4-5 years. If I have to choose some stock, the first one would be BEML, where the company is not only into defense, but it is also into mining and metro. The order book as on 1st November stood at 123 billion, and they have maintained a guidance of around 20% revenue growth. So these things are good. And the other one would be BEL. This company is a market leader in defense electronics, and government's focus, as I said, would be on defense indigenization. And this company, with its expertise, has a potential to secure large-sized orders. And they have a strong order book. They maintain the order inflow guidance of 250 billion. So these two companies, after the kind of correction they have witnessed from the recent highs, I think can give around 18 to 20% return if somebody holds for 1 year.
So the take coming in on the defense space, given the fact that it'll do well in the longer run, and also those are some of the picks coming in from Rajesh. But Rajesh, I wanted to understand from you, given the fact that you have a lot of budget expectations already floating in when you talk about the defense sector, and a lot of analysts are penciling in that the allocation this time around for defense should be in the range of about 1.9 to 2% of the GDP. You have other section of the market that is also or other experts who are of the view that this may not be enough in the longer run, given the fact that what is happening geopolitically. So how should one actually take these sort of commentary when you are actually placing your bets in the defense sector? And also now that you have Trump administration back at the helm, and the fact that he's focusing on domestic production a lot, even when you talk about defense.
See, you said it right. Some people are of the view that 1.9 to 2% is not enough allocation for defense as a sector, considering the kind of geopolitical tensions going everywhere. But the defense secretary has sometimes backed that they have enough funds to carry on with their production. And we have not heard of any projects being stalled because of fund allocation. So at this point of time, I don't think that would be hindering factor as such. But yes, I also agree that going forward in the next 4-5 years, we need to increase defense allocation, considering the fact that geopolitical tensions are growing every day. So they might be increased in coming years, but at this point of time, we have an expectation of just 1.9 to 2%.
Right. And also lastly, Rajesh, you did share with us some of your top picks that you like in the entire defense space. You did mention the fact that how you are liking BEML and BEL in this particular domain. But we cannot forget that you also have a lot of private players, and a lot of private players of the big conglomerates who are actually also participating very actively in the defense sector. So if one has to choose defense, when you are actually looking at it, it has to be the PSU counters all out?
I believe PSUs are better placed than private sector players, and it's not that private sector players is not performing as well. We have seen the likes of Cochin Shipyard or the GRSC doing very well, and even the valuations have for Cochin Shipyard. If you look, the valuation have cut by around almost 50% or even more. So the valuation have become attractive at 3,000 odd levels. Everybody was rushing to buy Cochin Shipyard at these levels. I think that can give decent returns if somebody is willing to hold for a period of 1 year or so. Even Garden Reach has got a good order book and they're doing very well. So these are some of the picks which can be accumulated in the private sector also.
All right, so those are the picks that one can watch out for. Defense in the long run, definitely a sector that one can place bet on, and not just because in and around the union budget, but given the fact that India is on the path of self-reliance when you talk about defense, and that also could augur well for all of these counters. And don't get perturbed with a near-term correction, isn't it, Rajesh? No need of concern for near-term corrections.
See, near-term corrections or market falls or every day watching the market is something that suits a trader. They keep stop losses or resistance levels and keep on trading. But for an investor, I think watching everyday market is like watching a paint to dry or a grass to grow. So that's impossible to do. It's better not to do that because that only creates panic. So if you are confident about your investment, you have chosen a company, right? The order books are good, the company is doing well. It's no point selling the stock if the market corrects for any other reason. So, in my view, if you're a long-term investor, every fall is a good opportunity to accumulate. If you're not comfortable, at least don't sell your holdings.
If you're a long-term investor, then you should go ahead and look at dips to buy into these defense counters. And yes, you should actually continue to hold on to these counters for the longer run. And if you're an investor, then yes, watching the grass grow every day is a little bit boring. So try not to gauge these counters based on daily price movement. Thank you so much for that, Rajesh, for sharing your top picks in the defense space in a special segment, budget and your sector. But on that note, we slip into a break, and when we come back, we'll start taking your queries. So don't go anywhere, viewers.
Powered. If you like this video, then like, share and subscribe to ET Now.